So we'll start the unit on economics. So since we are dealing about banking and finance, so all of this operate in a environment called economy. So economy refers to, so when we say economy of a country, the Indian economy, it refers to the total, all the companies, the services, the government, the schemes, all the economic activity. Basically, you can think of the companies basically, okay, and all the financial activity. Even the stock markets come into it, the insurance, the banking sector, mutual funds, okay. So that's the Indian economy. So we earlier discussed what is the size of the Indian economy, what is the growth, GDP growth rate, okay. So that is very important indicator. So in this unit we'll be discussing about the theory of economics, okay. So economics is this is a theoretical topic, and you not get into very much depth into it. There is a specialist, a separate subject. There are economists. There is a specialist post in banks called economist, okay. So you will not be recruited for that. Usually that will be a separate recruitment. For a general interview, it's sufficient if you know the basics of economics, okay. So since banking operates in the economy, banking is a part of the economy, you should know the basics of economy. That's it, okay. So in the theory of economics, the basic concepts we'll be discussing in this unit. So let us start with monetary policy. So monetary policy is the central bank's control of supply of money, okay. So money supply, I think we discussed this in an early chapter about M1, M2, M3 all. So money supply can be controlled by the central bank, RBI in case of India, because the supply of money impacts inflation. If the supply of money is more, it leads to inflation because more money is chasing few goods, okay. This is a concept we discussed earlier. So RBI will be using the control of supply of money as an instrument for achieving various objectives of economic policy, inflation being one of it. That's the prime goal, okay, such as reducing inflation. And during recession, monetary policy will be providing stimulus by reducing interest rates, okay. So monetary policy is a policy employed by the central bank of a country to control money supply. So in interviews they'll ask you what is monetary policy, okay. You should be able to tell that it is a policy that is adopted by the central bank of a country to control the money supply in the economy. And they might ask you, how does monetary policy stimulate the economy during recession? So during recession, what the central bank will do is they'll reduce interest rates, okay. So then people will be more willing to borrow funds, okay. So that will be leading to stimulus. The economy will be stimulated.